So I have been asking all my panelists one question to begin with because we are talking about the next gen economy where the Gen Zs will have a major stick. What do you think about the new generation or specifically the Gen Zs? What do you like about them?
So that's a very interesting question. So, but let me start with that also. See, there was a generation which worked for survival. Then came, which was our parents. There was a generation which came to build a lifestyle. They wanted to buy a house. They wanted to build a lifestyle. And the way we describe the next generation is a generation which works for experience. Okay, so for them, their parents have given them a beautiful house, they have given them an education, they have everything. Now, what do they work for? They work for achievement and accomplishment. They work for an experience. So, as a business, when you are trying to use Gen Z employees, or as a company, when we are trying to work with Gen Z generation, we have to understand what is it that they are looking for. As you know, if they are your consumers, they are looking for an experience. They are looking for now. You know, our parents could wait for 2 days for an answer. Gen Z wants the answer in 5 minutes. Harvard did a beautiful case study where they said, let's look at the response time minute by minute. You know, if in the first 5 minutes the company responds, there's a 900% increase in conversion between 0 to 5 minutes and 5 to 10 minutes. Okay, and the best part is they didn't study beyond 10 minutes because they didn't expect anybody to be responding to a customer after 10 minutes. They thought that's not possible in today's environment. But today, you know, I go to some sites and I see, we will get back to you in 72 hours. Now that's, you know, by 72 hours, you don't even remember what you were trying to do. So we are also half Gen Zs. Absolutely. So today we want an experience, we want to have fun. The customers want immediate, they want 24/7. You know, Gen Z will wake up at 1 o'clock at night and he wants to do the transaction then and there. So if we want to capture them, then we have to capture that mindset, and that's what I would like to say. And as a company, then you must understand if you're hiring Gen Zs, either they'll be the most unproductive employees for you. If you want them to be the most productive employees, give them the experience, give them the accomplishment, give them that achievement that they are seeking.
Fantastic. That was good to begin with. In fact, I was sharing my thoughts in the morning that a Gen Z in my team said AFK, away from desk, which I had to Google and find out what it is. So we are talking about the NBFCs in the first part of the session today, and the second part will be about the fintechs. The biggest challenge the fintechs, NBFCs always complain is the cost of funds and raising capitals. Banks are also these days complaining about the private capital is very low. I want you to pick up, I want to learn from you in terms of how's the current situation of the NBFCs in terms of raising capital, the cost of funds, what kind of new avenues they are finding, and what could be the better way for NBFCs in today's time to raise more funds?
Yeah, so let me start by clarifying a bit. People get confused between Bajaj Capital Limited and Bajaj Finance. And luckily or unluckily, we are both namesakes. You know, Sanjiv Bajaj and Sanjiv Bajaj. So we are Bajaj Capital. Bajaj Capital was formed in 1964. And our working with NBFCs is we help NBFCs raise funds. So we are one of the India's oldest investment bankers. We were the largest investment bankers for HDFC, Tata, ICICI. We used to help raise funds for them. And even today, we on a bad month will mobilize 300 crores. In a good month, we'll mobilize 500 crores or more for a typical NBFCs and other lenders. So our work has been around helping companies raise money to be able to, deliver their services, and also for the working with the companies on the propositions they are delivering to their consumers. So that, because for us, the servicing of that money they are picking up and being able to repay that money is very, very important. You know, I understand a lot of you will be from NBFCs, and you understand the importance of capital and the cost of capital. At the end of the day, you know, it is very, very important for NBFCs. You know, some people come to me and say, I want to borrow at X, But I don't care. I can borrow at X plus 2 also because I'm going to lend at 36. I'm going to have a structure where I'm going to lend at 28, 30, 32, 34, 36. And I always tell them, okay, friends, this is not going to work. Today we are living in an internet world where people can search. You know, that internet is now going to the bottom of the pyramid also. So they are also becoming more aware what is the interest rate, what is the other guy being charged. They can do their comparison. So, you know, I would like to tell all the NBFCs that, you know, your product needs to be the best. And the lesser the products you have, the better you will be. And the better you will be is the better process you have, because lending is all about process. And if your processes are strong, then there's no dearth of capital for you. Yes, there is always a dearth of capital for a person who doesn't know how to spend it. And there was a time when there was a euphoria, everybody was getting funded. People wanted to just give money, and that money has not come back in a lot of cases. So yes, people have got more scared. Banks, there was a time when credit cards were not getting issued, okay, because MasterCard issue and other issues, some banks were banned from issuing cards. So then when that thing went away, banks went crazy issuing cards. And now you've been reading in ET and other papers that there are a huge amount of defaults. People were given cards who didn't know how to use the card, how to use the credit. They didn't realize they are paying 45% interest up to that. And now they are, and that 45% interest, friends, is a debt trap. Even a 36% interest is a debt trap. It's very difficult. वो जो हमें पुरानी मूवी में जमींदार्स दिखाते थे, so you are getting into that league. So guys, so point is that cost of capital is very important. My advice to everybody, don't get into doing your own lending. Try to start with co-lending. You can do some sort of a loss share. Try for a loss share. If you can't get it, go for a first loss, because then that's more risk to you. And the lender is much more happy giving. Okay? And then you start doing your own funds, because your cost of funds will definitely be more expensive than bigger institutions.
So that is very, very realistic and meaningful as well. I remember a conversation recently, because a lot of banks are going through a CASA and specifically deposit issues. So I told him, but small finance banks are giving higher interest rates like 9%. Some of them was giving 9.75%. He says, Amol, अगर वो 4 to 10% पे borrow कर रहे हैं, सोचो कि कितने पे lend करेंगे, So that is another challenge. But if you look at NBFCs, sir, the cost of capital, cost of fund has been always a challenge, because ultimately they mostly borrow from banks, and major part. I have also seen a lot of NBFCs have come with NCDs and borrowing money through that. Do you see that, considering the funding winter is also going for fintechs, and the foreign investors are also not very aggressive in current time? Do you see this challenge of cost of capital and funding will remain for a few more days, months for NBFCs going ahead?
See guys, this is not going to go away. See, because everything starts with the euphoria. And that euphoria period for NBFC borrowing is over. Maybe after 10, 15 years, because public memory is very short, when the investors forget the amount of money they have lost, they'll come back and they'll say, okay, let me do it again. Or there's a new generation sitting on that seat and he's forgotten what happened 10 years ago or 15 years ago. And that whole thing comes back again. So that may happen. But, it's not going to happen soon. This is now going to be a game of efficiency. It's going to be a game on how efficient you are, how you're able to capture your customer, how focused can you be, and how good quality business as an NBFC you can do. If you do that, there is still funds available. There are still a lot of lenders. As I shared the numbers we are doing, there are institutional lenders when you're small. As you become bigger, you may become a deposit-taking NBFC, get rated. Again, a lot of people are willing to lend to you, they are able to willing to lend to you at a reasonable cost. Okay? So point is that you have to be very good at what you do. Blind money is not going to be available to you anytime soon, as that's my view.
Now, I will slightly shift your focus towards a small business, which is the integral part of the economy now, and an interesting trend which is emerging that everybody, most of the financial institutions and lenders are focusing heavily onto the small businesses and, micro segments or the MSMEs. In fact, a lot of NBFCs have lent them far more aggressively, and slightly RBI is also worried about it. When you lend to the NBFCs, when you do the due diligence of the NBFCs, does that matter to you, that where are they going to lend and how are they going to dilute their funds to?
Yeah, definitely. See, that we are the first level check. So when we propose, the reason we are able to close the transactions is that when we propose, a funding transaction to a bank or any other institution, they expect us to do the first level of diligence. If it is a retail investor, they expect us to do much higher diligence, which we do through research agencies and others. So the quality of the book that you are building is very, very important. And when you talk about small business, it's a great opportunity. But one of the mistakes I see that people have a standard product. Okay, but small businesses, maybe they are risk areas, they are non-risk areas. If you are giving him a LAP, it's a lesser risk. If you are giving him a loan against securities, that's a lesser risk. If you are giving him a loan against receivables, that's a lesser risk depending on who his principal is. If he is working for a huge company, then there is a lesser risk that the company will not default or will not pay. But you have to spend that time in understanding, okay, for this industry, suppose you decide to work for cement industry or paint industry, what are the processes, what can go right, what can go wrong, rather than going and spraying and praying. Okay, I will give to anybody and everybody. We like companies which are focused on sectors. They understand the processes of those sectors and they are able to do better in those sectors, and that makes more sense for us. And when we go to the institutions, when they do their diligence, when they ask us, it's like almost like a mini private equity lending. At the end of the day, they have to sign off on their diligence. They will do their diligence and they also look at these points. And the way we have learned is because of the questions we get from them. Are they doing this? Are they doing that? What is happening? If it's a red flag, if a person is lending across 8 sectors, it will be immediate red flag that this guy can't be a master of these 8 sectors. But if a guy says, okay, I'm lending to all the paint dealers in the country, then people will probably look at him with slightly more respect and they'll ask him more questions that how can you ensure that your payments are going to come back on time.
I think you can build your expertise over a couple of sectors, but that's a very interesting part that if somebody is lending to it sector, it's a red flag. Let me slightly tweak again and understand more on the small businesses part, since you deal with that segment, and try to understand, when you deal with the NBFCs, which sector of the small businesses, according to you, Sanjiv, are doing really well? And how's the whole, micro story, when it comes to the small businesses and MSMEs, because it has become an integral part of the economy and everyone wants to know what's happening in that segment. So what is your observation?
See, guys, you hear about India is shining. Do you agree? So
Yes.
when the large companies only shine, when their dealers, distributors, people on the ground shine. Okay, this is the hard or it is the hard truth. Lot of times, even the government doesn't understand that, look, we have to help companies support their distribution or the small businesses on the ground. And we have to make them grow. There's so much talk, direct, let's take it direct, in financial services I'm talking. But you're not realizing, let me just talk about financial services only.
Absolutely.
Okay, so financial services, there are lakhs of agents. When there were government saving schemes, there were lakhs of families whose house used to run, maybe 1 crore, 2 crore people who used to earn from them. And when you go direct, you outsource them or you say only buy through a bank or something, you are putting all those people out of business. And at the end of the day, that is going to affect the employability of the country. So we have to understand that, yes, I totally feel that small businesses are doing very, very well. But small businesses is not only a small manufacturing plant, but it is who are they manufacturing for if they're an outsourced this thing. Who are their vendors? A person supplying to them is also a small business. And a person who's selling for them is also, that kirana shop is also a small business. Okay, and So when there is prosperity on the top, it only comes when there is prosperity at the bottom. India is seeing a consumption boom. That is why consumption stocks are doing so well. And and there is, I think, there is small businesses are quite solid and doing quite well. And but they need much more support, and they need to be looked at with a different lens, and they need to be, lot of investment needs to go into taking them to the next level.
Sure. I have two quick questions to Sanjeev, and then I'll wrap up. But before that, if you have any question, I will come to you. So Sanjeev, I will take this question and then come to you. Be ready. Can I have a mic also there? Just give me 1 second. So Sanjeev, regulator is far more active, and it's been asking for compliance. You know, the risk has become the integral part of the NBFCs, and regulator is far more active. We have seen a lot of NBFCs are surrendering their licenses. But a lot of fintechs are also wants to become a part of the NBFC. What will make NBFC sustainable? Because now the regulators are active, cost of funds is also become a challenge, and compliance is going to go very high. And suddenly there is a competition also in the market. So what will make NBFC sustainable according to you?
So that I've already answered that to a certain level, but let me put it very clearly. As a fintech, if you want to be sustainable, don't start with your own capital when you start lending. Experiment, learn from someone who's done it before. So partner with a bank, partner with another NBFC. There are a lot of NBFCs whose business is to give money to other NBFCs. Okay, there are a lot of institutions who have looked at NBFCs as an opportunity to get higher interest rate. Partner with them, they have built processes, systems on how to lend. Okay, so it's a great way to partner. Or if you are well funded and you want to compete with them, okay, then you can go into your own lending. So, but when you start your own lending or your partner lending, be very careful on how you lend. Giving out money is the easiest. Okay? You know, we are used to, when we go about lending, people follow us. It's a pull product. Okay? People will come to you if your product is good. Okay? But you have to be careful, who do I lend to and what are the rules and processes. Where you have to focus on is, how will I get my money back? How robust is my process? How well is my tracking on that side? Okay? And that will determine when you make a good start. When you have made a good start, then capital becomes available to you. And as you become bigger, the cost of capital keeps going down to you to a certain level. Okay? So when you have a lower cost of capital, you can do much more. But this is the whole journey. Still, I think it's an untapped market. There's so much opportunity. There's so much opportunity. You know, I think it's a great area to be in.
Sure. Any questions? Can we have a mic there?
Hi Sanjeev, great listening to you, and I just wanted to pick up your brain with respect to some of the points you mentioned about the tightening of the credit and things like that. How is it going to affect the consumption, which we are seeing from the investment perspective, like we are seeing a lot of stocks in terms of, let's say, the hotel or the related sectors picking up, and at the same time we are seeing the credit. You mentioned about the credit card slowing down. And what we have seen is that the credit card issuers in the last so many months have curtailed certain offerings on the, let's say, the lounge access, some of the reward points, and some of these things. So how do you think that this is going to affect the consumption as a basket, and from the, let's say, 1 year, 2 year perspective?
Okay.
So talking about focus, like, you know, again, see, market keeps changing. Financial services market, when you've chosen to be a part of this, or fintech or technology or a doctor, life changes every day. You know, there is a new innovation, like Economic Times. If he takes 2 days off, third day he's come back, he's going to see a different world, because there are 10 different news that has come. I was meeting the CEO yesterday. We were discussing something at 7 o'clock. At 9 o'clock, there was a circular which changed the world. Okay, or change to a certain level, aimed at changing the world. And yesterday you saw what happened to the stocks of the insurance companies. So, you know, we are in a very dynamic market. It is going to keep changing. We have to be good at what we do, and we have to be focused. So I was giving an example. Yes, credit cards are slowing down, but we have launched a credit card product called Tiger, along with IndusInd. It's called Tiger Credit Card, which is doing fantastically well because we have made that product for a high spender. We call it the high spenders card. Okay? It has crazy amount of reward points because we are giving a lot of the, you get up to 6 points and each point is worth 0.4. So that means 2 rupees 40 paisa comes to you as a return for every spend you make. If you convert it into airline miles, it's normally conversion is 0.25, 0.5 to 1 point. Here it is 1.2. Okay, so but we have made it for a high spender. We have kept the features. We have removed a lot of unnecessary features, let me call them. We have kept very, very basic focus features, lounge access, concierge services, golf, and high reward points. That's nothing else. Earlier we were giving, it was quantity is quality. When we started working on this card, the first draft by the team had 40 features. And I said, look, I don't even have the time to read it. Why would you put it there? I said, let's cut it so that we know what we are having. So I think it's all about focus. So guys, please, the future belongs to companies which are focused. My father, when I joined the company, told me one thing. He says, Sanjeev, success will not come to you because of what you do. It'll come to you because of what you choose not to do.
Absolutely, that was very, very meaningful. Maybe a few more seconds. Any quick question? Anybody has any quick question? No worries, I think that was really nice. Sanjeev, it was very, very meaningful, but you are absolutely right. Even in the world of BFS and otherwise, 2 days time is also making a difference. While I have been busy here since last 3-4 days arranging this event, suddenly I came to know that SBI has raised 50,000 crores of bonds. So that's how the change is. But thank you so much for sharing all that and being part of ETBFSI Converge. Thank you. Thank you, Sanjeev.
Thank you. It's great to be there. And guys, you're in a great industry. It's a great opportunity. Just be focused and you have a great life ahead.